gonna record this for people that might not be here right now and might need to watch the replay. Okay, so let me see. All right, good to go. So last week we looked at a few assets. I mean, there was two assets we looked at last week. Let me see if I can find the log of it. Trying to search. I normally have a text file that I have. I call trade. Right, there we go. Nah, this wasn't last week one. This was till the first, so that was starting the month. But I'm gonna use this data in this sheet anyway. So last week we looked at Euro AUD. I still left on my chart right here, which was we're looking to buy. And I remember I did the analysis last week, expecting it to go long, and price actually did went long. You had a short-term access to buy and then take profit, and if you had to hold longer, you still had your profit to be made throughout the entire week, which ended up to be roughly about 212 pips. Not too much, but something. Right. This week, we'll probably look at different other assets, and then what I really want to know is, does anyone have anything they specifically want me to look at before I do kind of like an overall top-down approach? Or is there any questions in regards to trading that they would like me to address before I begin doing a full analysis? Okay. Let me see. Okay, seems to I don't know. Oh well. Hey guys, apologies. I thought the waiting room was already disabled, and I was here speaking to myself, thinking you guys were already in. Welcome everybody. So last week we looked at I think we looked at NZ Euro AUD estimating to go long, and market did play out as we expected it to. Go long. I think I remember saying you guys
own a course. So if anybody reaches out to you for money,
someone has their mic on me. I just have to mute everybody for a second. So yeah, so the asset did play out how we wanted it to, and that was good. If you need to rewatch last week's webinar, it's on YouTube. I've already posted a link in the Telegram group a while ago, I think the middle of the week, so you can watch that again to see exactly what we analyzed last week. But to start off today's session, does anyone have any specific assets they want me to look into, or is there any questions in regards to trading that you would like me to address before I actually, start analyzing? Okay, Euro AUD, all right, Euro JPY. So okay, that's cool. Does anyone have any more assets you want me to analyze, or those two is fair enough for you guys? Or is there anyone that have any questions in regards to trading? Please feel free to ask. I would go through them, and I would try to answer them to the best of my knowledge. Okay. Okay, we have someone has their mic. Can you guys please mute your mic, please? I don't know what's that from background, but please mute your mic. Okay. All right. So let's take that again. So okay, we have Euro AUD. I'm just gonna type that up. Euro AUD. JPY. We go GBP USD. And we have GBP JPY. So okay, CHF JPY. So far we have, if we look at it in terms of future, we have Euro, we have AUD, we have JPY, we have GBP, USD, and CHF. So those are the 5 assets that we're meant to look into today. It's recommended. So I'm just going to quickly just put them right here separately in regards to CO2 report and seasonality. So break them down. Of course, if you have any other questions, that might not be related to market analysis, feel free to type it up or let me know. Send me a secret message and I'll look into it for you. So GDP and then we have CHF. So okay, so we have these 5 assets to look at today. Euro, AUD, GBP. Okay, and we have USD left. We have 6 assets to look at today. So let's go check CO2 report first and then start it off. So CO2 report, the way it works is basically we're copying, okay, hence the CHF as well. All right. Give me a second. So the way the CO2 report works is basically we're piggybacking off information from commercial people. These people called commercials are people that don't use the market to make money in regards to speculation. They make their money from actual normal transactions for their companies. And the main reason we follow them is because they have no interest to make money whatsoever in the market, and they're using this for the natural resources. They're mostly right because they have to carry out steady market information, and they do have some inside tips as well on what's going on around the world, and also given the fact that they do have satellites to watch different countries simultaneously. So it puts us in a very good bracket, to always look at these guys and copy these guys. Right, so I'm gonna look at, let's start with Euro first. I'll just work my way up with top of the list, and then 1, 2, 3, 4, 6, 7. We have 7, 1, 2, 3, 5, 6. I'm just gonna load everything up, to be quite frank, because I think everything you've requested for is practically covered here. Yeah, except from CAD. So yeah, CAD is not requested. So the first thing we look at is okay, we have USD right here. Makes it easy for me. What we can see is commercials. These guys right here, commercials. And from the commercials, what we can see, what we're looking at is changes. So it's changes, and in the changes, what we can see here is they're going short. They've added 5,000 new positions into the USD, the commercials. We don't pay attention to the non-commercials, and we don't look at every other thing, from here to here or here to here. We don't care about that. What we just care about is the changes between here and here, if it's green or if it's red. So we care about. So in regards to USD, for example, and this was on the 14th, which is quite recent. CO2 report always lags about a week. What we can see is the USD going short. All right, that's the first one out the back. Then let's see which other one is next. It's pounds. It's taking a while. All right, pounds. There is no direction in pounds, so they're neither going long, neither are they going short. So for that reason, we take our pounds out of the equation. So GBP is out of that equation. Doesn't mean that we can't trade it. If we find, for example, USD going short and the seasonality of USD going short, then GBP USD might be long because GBP comes before USD, so the inverse happens. So in regards to pounds, we take that out of the equation. The next thing is AUD. AUD is not a long or short as well, so that also goes out of the equation. So if we had, I said for example, if we had GBP AUD to look at, I'll have deleted that out of the list. We don't need to look at that because, it doesn't really seem like it's aligned. Then we have NZD also. They don't have any alignment for NZD. So take that out. The next one is CHF. We have that going short just by a tiny bit. I always like to see a good amount of, movement. So I'm going to start AUD just because of the movement is very small. It's just a very small size position going short. So take that out. And then JPY, there's no alignment in the long and short. What I'm looking at is this. One has to be green, one has to be red. And if both are green, we take the highest green. And if both are red, we don't take anything at all. So JPY, we take that out of the equation. And so, for example, now, because we knew that GBP is not aligned with JPY, it's not aligned, and JPY also is not aligned. GBP, JPY automatically isn't something we're going to trade this week. And Euro also applies right here. There's no long, neither is there short in that direction. So Euro also gets taken out of the equation. So Euro AUD, for example, also gets taken out of the equation. AUD JPY, I think we've checked AUD already. AUD JPY also gets taken out of the equation. GBP USD can be left because we have a direction for USD on shorts. And CHF JPY can be left because we have a short direction, and NZD CHF can also be left because we have a short direction. But just from the list that you've given me already, I've been able to eliminate some few assets out of that list by not even looking at the chart to analyze it all. Yes, my volume might be slightly lower than usual because I'm not back at my place yet. So I'm in a different city right now. So I'm not in the same setup I used to be when I'm at home. So hence why, if you see, I really hardly interact as I normally do because I'm off for a while. But I should be back in my city. I should be back in London in about maybe 2 weeks. So everything should possibly regulate back from that point on. It's just I've been extremely busy. So apologies for that if the sound isn't coming out great. So the next thing we look at is the seasonality. Now, before I actually look at the seasonality, let's look into gold as well, because gold, sometime around this time in the year, it does actually have the potential to give some decent amount of move. So gold right here is giving us long. I'm not mistaken, yeah. Gold is giving us long, and it looks like a decent position. They're adding 4,000 position, and these guys are adding 16,000 positions. So there should be a lot of liquidity, for money to move, out of this equation. And also, if you notice, the non-commercials actually have spreads because those are people like you and I that trade. Commercials don't have spreads because they're not trading. They're literally trying to move money from one country to the other. So that's another thing to consider. Yeah. So the next thing to look at is the seasonality. If we look at the seasonality, we want to look at the seasonality of CHF, USD, and gold. So let me just go for the Forex one first. CHF. And if the seasonality of CHF is pointing short, then we might have a good chance to go short. If not, if it's pointing long, then we have to delete that out of the equation. And keep in mind, it's not every week you get a trade. Some weeks you don't get a trade, and if you don't, you just have to go do something else, Go have fun with the family. Yeah, and that's it. Or do other businesses to generate you money. So CHF currently right now, we are on the 19th right here. And I'm actually going to isolate them a little bit just to get a little bit more clarity. So 19th right here, CHF is meant to fall from the 5 years from about 22nd. So that's Wednesday from 5 years, and then 15 years. Let's see when it went to fall from, practically from 17. But also 22nd seems to be a good time to look for 22nd, 23rd seems to be a good time. Then also, 23rd. So CHF aligns more about short in 22nd, 23rd. Yeah. That's for seasonality. Seasonality is basically me just looking at how price is moving up and down across the entire year. And if all three are aligned, all 3 years are aligned, I will then take that trade. So if the 45 past 45 years, past 15, and past 5 years are in alignment, I will take the trade in according to the direction that it's pointing me to go. So right now, CHF is pointing me to go short, and seasonality is also pointing me to go short from the 23rd, which means I have two on my checklist ticked already. And if those two are pointing short, then likelihood of CHF dropping is higher. So that short is going to last up until the 26th before we start seeing the pushback in all three lines for 26. Then next thing we have in line is USD. Now you might be looking at, I might have not checked the chart. Why haven't I opened charts yet? The chart is literally less than 10% of what's going on. You know, I know you can drop support and resistance. People can do their Fibonacci. Guys, please mute your mic. Someone has the mic open. I've tried to mute you, but it's not muting. Can you kindly mute your mic for me, please? Okay, you know what? All right, I'm gonna do this. Yeah. Apology, guys. I don't understand. So I literally put it on mute so nobody can unmute themselves, basically. If you need to ask question, please type it up in the chat, or you can private message me in chat. That's much efficient. So the next thing to look at, now I got a little bit confused. Yeah, so the next thing to look at is the USD, and we're looking for short. And 19th is the date. So currently right now, USD doesn't look like it's gonna short up until here, 26th, or 28th, actually, between 26 and 28. But ideal short for USD should be somewhere around here next month. So for that, USD will no longer be traded. So the only asset we have to look at right now is CHF looking short. And then let's look at gold. So let's see what gold has for us in store. Gold is going long, and when we're on the 19th right now, I'm going to quickly just isolate it just to get a little bit of clarity. So according to the 5 years, gold is meant to start tanking from 18th actually. Keep going up. And let's see 15 years. $15 look more like a down, so until the 25th, which is next week. And if we look at 47 years, yeah, 47 years also looks like a down. So to about here next month. So in that case, what I would ideally do is wait till next month before I actually trade gold. And if you notice, gold seems to be inverse of USD. They play inversely most times. So with gold, we're not going to touch that. So the only asset left out of the entire asset class that was called is CHF. And we only have about 3 days. So to me, this is good because then you can be focused on what, on one asset at a time, and then you can actually quantify how much you can make if you trade accordingly. So, and there's more focused in the game. You don't have to be looking at too many assets at the same time. So now we have the direction of the asset. We have the date we're looking to go into. Then the next thing is which Forex pair would be the best. So for people that are new, yeah, I'll check the NASDAQ for you, bro. For the people that are new, you might not understand why I look at them individually before I look at them in regards to pairs. So the main reason it's more powerful to look at them individually than to look at them in pairs. There's more stuff in play when you look at them in pairs than when you look at them individually. So, but from just looking at the CHF and knowing CHF is going short, I can then compare CHF to all the CHF pairs there is. So if CHF is going to be weak, then any asset that's going to be strong will do well enough to give us a direction. So the next thing to look at is the probability. Now, probability gives me the percentage of when I have on a specific date. So if I know that CHF is going short between its 22nd and 23rd, I want to look at if I have a higher chance, higher percentage going short at that day. And then if I do, then that will be the asset I would trade against. So CHF JPY, I'm going to be looking from 22nd, 23rd if we can find short. So on the 23rd, we have a short right here, but then we have long back. And I don't like when an asset goes long, short, long. It means most likely I'm going to see a consolidation. I want to have 3 days straight pointing short. So for CHF JPY, I would not be trading that. And then we'll check the next one, Euro CHF. Now, because Euro comes before CHF, and we know CHF is meant to lose trend, then Euro CHF should be going long around the period that we're expecting it to. And so the same thing happens on the 22nd is actually short, then long, then short. So we'll take that out of the equation. The next thing is USD CHF. So USD CHF, we're also expecting the same thing. USD to be long. It doesn't really seem like we're gonna have that long on USD CHF as well. So because it gives us long then short all the way through. If this was long for 3 days, then USD CHF will have been a good trade for us to go into, but we're not gonna take that. Next thing to do is here. So CAD CHF, we're also not going to take this because CAD seems to be losing strength against CHF. According to the probability, CHF is meant to be strong, but we're expecting CHF to be weak because of what's it called? Hold on a second. Yeah, because of I think I closed the wrong thing. Because of the COT and the seasonality are going short. So next we'll look at AED CHF, try to see if we can find that short. So AED CHF in that, we're expecting it to go long, right? So AUD CHF, because we're expecting between the 22nd and 23rd for CHF to lose strength, what we can see in AUD CHF is on the 23rd and 24th, we have a 59% and 52%. So trade would be AUD CHF long between 23rd to 24th. So because 26th is a Sunday, so it's not going to play out for us. So 23rd, you can go in on the AED-CHF and come out on the 24th. So it's about 2 days straight. Trade it carefully and you should be perfectly fine. And the next one to look at is CHF. So we're expecting CHF to lose strength, and now we see a more smoother trade for this one because NZD-CHF is giving us that long that we want. So NZD-CHF we have from the 21st actually. But now because we know 22nd is the best date, so we nullify that and put that 22nd. And that would last till 24th because we have that long 3 days to 24th. Right. Someone has a question. All right. No, that's not me. See, so right here, it's June 06. 06 right there. Or were you talking about the previous asset? If you want me to look at the previous one, what AUDCHF, shall I look at that? Is that what you're talking about? Or the NZDCHF? Okay, we'll put that all right there. So the next asset to look at is GBP CHF. Now we're expecting that to also go long because CHF we're expecting it to go short. So GBP CHF. GBP CHF doesn't seem to favor us because it's then short, long, short 50-50, short, you know, and then long and all of that. So I don't trade assets that are going up and down, they're a bit choppy. NZD-CHF to end of the month. There's a possibility that it could do that, but because if you look at, let's look at the NZD seasonality. Let's see what the NZD seasonality say. Because when I looked at the CHF seasonality, there's meant to be a pullback, so I'm trying to avoid that pullback. You can go in after the pullback again to then, determine what's going to happen. So NZD is meant to start losing strength, right? That's what we know. And it's going to lose strength up until, you're correct, up until July, right? But it's pullbacks like this between these periods, for example, that it has that pullback. That's the place that most people get killed off. So the best thing is to take your money off before the pullback, then re-enter after the pullback is done, to then have a little bit more capital to play with. Now, if we go to CHF, for example, let me see CHF again. CHF again. If we go to CHF now, CHF is around here, falling. And then once it falls to about 27th, 26th, actually, there's going to be a pullback. So the essence why I say we should exit CHF on the 24th, because 24th is a Friday, 26th is a Sunday. So after that Sunday, we would probably see CHF most likely moving back up. And if it's moving back up, then whatever you've held from, let's say, Wednesday to Friday would be taken away from you between Monday and Tuesday, the upper week. So rather than having that taken away from you, just take the money and then wait for the next alignment, then go back in. That's why I'm kind of trying to play it safe. Okay, that's basically what I want to do. I'm trying to play it as safe as possible. So let's look at NZD CHF, for example, on the chart. So this is what we have on NZD CHF. Now we have that bottoming out already, and we're looking to go long. Now this is beautiful because if you look at the Williams is already showing that there should be an up move coming. And the prior down move, for example, right here is predicted it's going to dip before the dip happened, and that dip happened, and now the long is now being predicted. Now, so if we just look at this is a good zone because this is an order block zone right here. And try to keep your trading as simple as possible. Keep it as simple as possible because that way you can then see things that are going on a little bit more clearer. Like here's more like a double bottom or a triple bottom. There's touch one here, touch two, then touch three right here. So a triple bottom. And when prices tend to do that with technical analysis, price tend to bounce back up. So now just seeing that alone reassures me that I'm going to find a good, a good point to a good trade to go into in this asset. And the next thing I can see right here, this is something you have to train your eyes to see. Or if you're already used to it, then it's good. Right here is a point of support, and right here is also like a point of resistance. So I tend to mark the next point of support, resistance as take profit. So take profit one would be from within here to here, for example. So what I expect price to do is mostly price to consolidate on lower time frame around here. And come Wednesday, price start kicking back up. Or it could kick back up by Tuesday because we saw on the probability chart that price could kick up on Tuesday. So you might have to start watching a day earlier, maybe on Tuesday, start coming to the market. But on Monday, you don't really need to come anywhere near to the market. You just come on Tuesday and start observing. And if you find a good spot to take the trade within here, you take the trade, and then you use your ATR to set your stop loss. Now, for the guys that have a smaller account, you might not want to set a stop loss of 73 pips or 73 times 1.5 pips. You can go on your 4 hours, look at the ATR value, which is 45 pips, times that by 1.5, and set that as a stop loss for yourself. And also that could be a first take profit value. But ideally, I would say your first take profit value should be somewhere around here, this top right here. So if you take a first take profit, let's say you got in around here, for example, this is hypothetically speaking, because right now I can't really assess what market is going to be on Wednesday or on Tuesday. So, but I know on Tuesday, Wednesday, I'm looking to go long. So if price is somewhere within here, I'll take that, and that's about 67 pips profit. It's not a lot, but it's still something, you know. And then your next take profit will probably be about your 20 EMA right here. 20 EMA will be your best option for the next take profit. If we look at if you look at a lower time frame, you can see right here, 50 EMA right here is one of the take profits zone. And that's close to where the 20 is. So what will happen is at the end of the week, most likely by the time you're going in and price is about to take profit, the 20 will have dropped to this zone already, and then you can take your profit from there. So ultimately, if you have two positions going in, they're equal positions, let's say 0.10, 0.50, whichever one you choose to go in with, and depending on your account size, you can ideally take about 170 pips off the table, because that'll be 61 pips, let's say, from that part, and this is 112 pips. So if you add that, that should be 173 pips to collect off the table on this asset. And also, you still have to do a little bit of technical analysis for the AUD So in regards to going long as well. So these are the trade that we have this week. And then let me go look at NASDAQ quickly. If you have any questions, please let me know, and then I would answer that. Now, with NASDAQ, take this with a pinch of salt, and I say this every single time. We do not have the probability, neither do I have the COT report for NASDAQ. So this is super high risk. This trade in regards to this NZCHF is a more or less medium to low risk trade. So you'll be fine with that one, even if you don't have a big account size. But with NASDAQ, make sure you have enough account in this one to go in, because there's only one tool to use in this. And if you don't get it right, it's very volatile. You can lose a lot of money. So whatever I tell you, take it with a pinch of salt and approach with caution, basically. You have to use your own intellectual capability to decipher what you want to trade. No. And also, I'm not trying to be like, oh, you're a professional expert advisor in terms of trading. You have to assess what you want to trade with your own knowledge that you have so far. So with NASDAQ, on the 19th, we're seeing drop. The best option will probably be 23rd, but that move is very short. So if you want to really go into NASDAQ, probably from tomorrow, start looking at a possibility of a sell in the asset. And between 23rd, 24th, you can actually see NASDAQ drop to probably 26th. That would be your best option. There will be a slight drop in NASDAQ for about 3 days, ideally. So between the 23rd to 26th, which, if I'm not mistaken, that should be Thursday to Friday, right? So you only have about 2 days, yeah, on NASDAQ, because those are the only days that aligns fully. I would have said 20th would be a good time to go in, but then the 5 years doesn't align with that, so I wouldn't take that. I would probably just wait it out till Thursday. Okay, James, this weekend. Yeah, I mean, you're correct, Mr. Uzo. At the end of the day, it has to do um with your risk, kind of like your risk tolerance, basically. If you have a high risk tolerance, then you can take it all the way, all the way to the end of the month. But if you have a lower risk tolerance, then you might want to play safe. I mean, for someone like you, and you have done your analysis, then it's perfect. Just shoot for it. Shoot for it straight to the end of the month. Obviously, I would say employ like a trailing stop in place. So just in case maybe you get kicked out or anything, then you can then have some profit to keep. Let me check Bitcoin for you. Bitcoin is I keep saying it, like you should wait for Bitcoin halving to happen in 2024 to drop back in. That will be your best bet. With Bitcoin, crypto is going south at the moment. Heavily south, and which is good to buy, but you don't know when it's gonna stop dipping. Ideally, so it's not playing out the way it should play out anymore because the hype is gone. People are not investing that much money into it. But if you look at Bitcoin, for example, from the 13th right here of May, around here, Bitcoin is meant to drop and then consolidate, and it's meant to start picking up from the 11th. But the thing about it is we haven't seen no CO2 report. Neither is there probability for it. So it's a high risk trade. Bitcoin is meant to consolidate for a little while. I would say before you even go back to Bitcoin, you probably want to wait till maybe July 15th. And then if we see a CO2 report pointing Bitcoin to be bought, then we can then look at that. I can also then look into probability for it. But you have to be very careful. You have to be very careful with Bitcoin. I would say stay away till probably July. July should be the time you should come back and come check. I mean, you might see a little bit of buying power coming in at probably the end of this month. Then it's probably going to consolidate and then drop again. The pattern is quite consistent. So, but if you want to make the best out of Bitcoin, you have to go in during the halving period. In the halving period, you can actually take a lot of money off the table at that point and generate a lot of money. Yes, Mr. Ozo, you're correct. I mean, it seems like a clear trade to go for. It seems like a very clear trade to go for, but it's up to every individual to know about their risk tolerance and how far they want to push it. But that's all we have for today. I mean, out of all the assets that have been called, those two seems to be the only one that aligns with my strategy at the moment. And then, we'll see how it goes. So on that note, guys, I really do appreciate you guys for coming today. Thank you for attending. If you have any questions, please let me know on the Telegram chat. And if you need the tools, just go to business.dameempire.co.uk and you would find the pricing page right there. I'll also post it in there for you after this webinar. So if you want to grab the tools and do your analysis yourself, please feel free to. They're good tools that helped me a lot in my trading journey. So thank you very much for attending and have a wonderful trading week to come. God bless you guys and take care of yourself. Thank you. All right, save this.